yourself by becoming rich.
Take all your money, buy Bitcoin.
I say when we sell.
Wake up every morning and say GM.
GM. So, today is Wednesday, 2nd of October. Believe it or not, we're only one day into October. Feels like October's been going on for 6 months already. A lot happened in a day. So yesterday we had an escalation of war between Iran and Israel, or at least Iran attacking Israel, and that happened right around the New York session. So we saw across markets at the same time some strong selling, S&P, some wild moves on the dollar, strong move in the dollar. We saw obviously Bitcoin with a strong move down. We saw alts, total 3, with a very strong flush down. And we saw other stuff like gold with an initial, where's gold from here? Yeah, with gold moving up initially. Wait a minute, wrong one. Where am I? Not gold. Gold. Here we go. Monday, going into Tuesday. Yeah, initial pump of gold that I ended up retracing. Crude oil spiking. Probably the most, obvious effect. War in the Middle East, oil prices will spike right when crude oil is at local lows. And anyway, so the attack itself generally is not going to lead to much more than the initial volatility shock. So if you look at like the VIX, for example, volatility spiked on Friday, as I mentioned earlier, by the way. Somebody was front running that. Some little bit of insider trading going on. You see here, where did Chris talk here? This is a guy on Twitter who, an options expert, talks a lot about options, and I'm not an options expert, but I understand what he's saying generally. And so somebody was basically getting long volatility. And that means that was happening on Friday. And then suddenly, on Tuesday, with this massive explosion of volatility, someone probably made a lot of money. And then the market was on. So, what happens next? It's pretty likely that that's the bottom for now, and we have a decent rally and a bounce back today if there isn't some kind of escalation. Because, World War III is, probably the assumption / bet you would make is that World War III is going to be avoided. Right, it's not going to happen right now. And even though every time this happens, I mean, this has been going on since last October, and obviously it's been going on for decades, on and off. Every time it happens, it feels like this is the one that starts World War III. And then it never is. And what World War III actually means is the US getting involved directly and actually, becoming involved to the point where they get attacked on US soil and then have to get dragged into a war. Anything outside of that is another regional conflict that we've had for decades. Again, Afghanistan, Iraq, all of that. So, as a trader, and this is all that matters, this is not a place for politics, it's a place for trades, right? Trading, markets, and taking the best decision for your portfolio and for your investments as you can. Your assumption should be that nothing happens beyond the initial volatility spike, that it doesn't escalate further. That doesn't mean that there isn't real stuff happening in the real world. It's like, in terms of the markets, nothing happening means nothing escalating beyond this. And so if that's the case, volatility, the things to watch today, volatility will come back down, and the uncertainty will leave, and then the people will look back and say, all right, well, because of that, Bitcoin is probably cheap, because it moved down a lot in a very short space of time, and it will retrace back up most of that. I am in a long from a day trade that I mentioned in Day Trader channel, which I'll cover on Trade of the Day. So check Trade of the Day out. But initial reaction bounce is most likely. If you remember yesterday, or when I did the monthly preview, mentioned this, we had the highest monthly close. And I said, check out monthly preview. The perfect thing you could see would be early in the month, we put in the monthly candles low wick, we test that highest monthly close, boom, there we go. Now, do I think that we've reclaimed 61.3 and that we can't go back below it? It acted as a nice pivot, and I would say there's a chance we don't go back below it. For that to happen, it would have to show Bitcoin significantly rallying really far up, so that any pullback that comes is just a corrective move that comes back like towards this area, and it puts in a higher low over there, right? That's how it would have to look. It'd have to look like a higher low for BTC forms around this area. That's if you're saying it's not going to go to the lows, it's not going to retest the lows, it's not going to sweep. And I'm open to that idea, because in the short term, it went down far and it went down fast. And if it's gone down too far too fast and the big players have gotten filled earlier than they might expect, you're going to see a stronger reaction. There'll be a lot of resting demand there. And that's the next thing I want to talk about, because everyone and their mother has seen this all over Twitter, no doubt. This is an order book for Binance where you see stacked bids between 59 and 60, which basically means, if I can zoom in, the purple, the yellows and the purple means a lot of orders. So you're talking a couple thousand BTC sitting below there as price came down, got added onto the books because you can see the past. The yellow lines were already there, so those around 60 and 59, you always have a stack of orders anyway at the round numbers. But then somebody placed basically a huge wall of orders. And if you look in the comments, CZ's back, CZ's back, CZ's back, CZ's a hero, right? Everyone's saying, obviously, CZ's out of jail and he's back to protect the market, plunge protection, not allowing it to go lower. So, two ways this can go. I mentioned this to the, I'm on a, what's this? This is a 14-minute chart. What the fuck? I think I was meant to do a 4-hour chart, right? Yeah. I was supposed to look at a 4-hour chart there, not a 14-minute chart. So here's how it would look on the hourly. I would be watching for, if I go to, here we go. I would be watching for these trend levels. So the way you want to see it is, we had a strong 1-hour trend. We lost it, and we lost it mostly because of that, because this happened Sunday night going into Monday. This would have been front running as well. Because if you saw what I just showed about the VIX on Friday, somebody was obviously betting big on volatility on Friday and knew ahead of time that this attack was coming, or that there was going to be at least some escalation. So it's not without, it's not beyond the realms of possibility that this entire move flush was like a shakeout and was a, front running of the war fears. And of course, people who know about it in advance, they exit early, and then people sell down here because the market structure is breaking, and other people sell maybe because they have some knowledge, but nobody has any knowledge until here, and then the news comes out and it crashes down, and then everyone's like, oh shit, we must go lower. Don't forget that what everybody wanted to see was just a pullback to 62.5 or 64 or 65. When you go way beyond that really fast, all I see now is people calling for lower, right? Oh, well, we have to go to 56, or even the bullish ones say, well, we'll sweep 60. So back to that idea of the order books, 60 will get front ran, and that's why we've bounced here, and that's why I took a day trade long, which I will take probably a little bit of it and put it into a swing trade depending on how things go. There's a lot of gaps above. There's a lot of positioning that was forced out in the market yesterday. I would watch this cluster of moving averages. This matters in an uptrend, like in a trending market, an environment where people are feeling bullish and trying to take trend trades. Looking at those bands is where Bitcoin needs to build back through and reclaim before going higher. So one of the things you want to look at for any of these coins, as you look at APU still, APU must be the future of finance, the hedge against war. It's fucking absolutely chilling. But I look at it like this. So during bull markets or bull trends or even down trends, but mostly during up trends because they're more trader friendly for these type of things, I just have that open all the time. 6 charts, 4 hour, 1, 15, 5, 3, 1. Sorry, 1 hour. And watching them, just a visual overview of the market and seeing where is everything in relation to its trend. So Bitcoin still has a 4 hour trend to defend. I mentioned this yesterday though, that Bitcoin is not in a trending market structure. It's still within a range or consolidation. So what you're watching next would be the 15 minute. 5 minutes about to flip back to bullish if we have another break higher. 3 minutes back to bullish. Obviously 1 minute back to bullish. You're looking at the 15 minute as one that you would probably play intraday. And how that would look is if it's going to flip back, you would see it go towards the highs first. It would move through, the levels to that high, probably come back. And then the difference here is if it's a bearish rejection, right? If that's because they're all in the downturn, right? If it's a bearish rejection, it rejects there and it goes lower and it goes to new lows. If it runs all the way through and it rejects and it comes back down and you see it holding and it starts to build through the bands, that's how you get the bands to cross, and that's when you get the next push, right? So keep an eye on that intraday. But back to the point about the order book. So I'll explain the logic behind this. You've seen on the screenshot that everyone's been looking at 59 to 60. Everyone is aware of it. Everyone who's on Twitter knows about it. So a person who actually wants to fill, this is basically psychology more than anything else. A person who wants to fill orders, right? Someone who actually wants to buy 59 to 60k and has whatever 2000 BTC that they want to fill, they will not advertise it on the order books. This is like, and this probably is CZ or Binance, the Binance whales, whatever. This can be done for 2 reasons. Number one, it can be done to say we are going to protect the market from dropping any lower, because it's in the interest of, you know, exchanges or big players or whoever. It's in the interest of them to not let the market nuke. There's this misconception that market makers and the exchange owners and the big whales, they always want to nuke it, they always want to manipulate you. Binance makes their money off people trading. People trade more in a bull market. It's absolutely in their interest to keep the market strong and rising. That's when they make more money off fees as people trade more, right? So you can put it there as an advertisement to say, look, don't worry, everybody, you feel free, just buy and buy and buy, because if it goes any lower, don't worry, we'll absorb it. And so the market initially rallies away because nobody wants to sell into $2,000. Nobody wants to sell into a 2,000 BTC wall right away. Why would you? You're going to sell into something that's almost certainly going to stop the market going down. So it doesn't reach it, and then it moves the other way. Then people start to think, oh, so now is this it? Is this the bottom? Is it not going to get filled because that wall cannot be passed? You usually get a rally. Wherever the rally goes to, one of 2 things you'll see is that the rally will move up, it will then reject, and it will then hit those bids. It basically gets to the point where people say, CZ, you've saved the market, or whoever, but you know, they're going to assign whatever narrative they want. And then it runs down, back down, and actually hits the bids. And they get some fills. So it front runs because people don't want to sell into it. It rallies up, people start buying, they're like, oh, that must be going to hold. Comes back down, flushes them, takes out those stops, and fills some of those bids at 2,000. If that happened, you're then looking for it to hold and reclaim, right? Maybe have another stab into it, but that area to hold and the market to actually rise. Second way is that it does just front run, like that's it. And that would be like the path I mentioned before, it rallies up, comes back, but makes a higher low. Because those orders stay on the books, they're clearly not budging, they're not spoofing, and the market never goes there because there's not enough actual supply to sell down into it, because really this move was mostly driven by war fears, and if the fears aren't as bad as first thought, we go higher. And then the third option is like the bearish option, where it rallies up, same thing, comes back down, but then the wall of orders gets pulled, so they take them off the books. They're like, we're not trying to protect the market, you retards. We want it to go lower. And it flushes lower, and then, you know, once we're below that level, you get this kind of choppy phase until it's able to get back above. That's an example of where the bid disappears, like that. As you see it come down, they're like, don't worry, CZ will buy it, and it disappears. So this is a psychological game. You have to understand, if somebody wants to fill 2,000 BTC, they can do that without ever putting anything on the order books. There's OTC, they can buy OTC. They can do it on the order books, but through small orders, right? And they don't have to advertise 2,000 Bitcoin stacked. They can buy incrementally. They can buy with hidden orders. It's not hard. And I don't mean hidden as in actually hidden. It'll be an algo or something that is putting the orders onto the book on and off automatically in small amounts. So that as price is there, it looks like there's no massive wall, but it's still filling. It's still supporting the market. You can see that through price action. If it comes down and it's not going any lower, and it's bouncing and it's not going any lower, you'll see that. So price is an advertising mechanism, and so are the order books. So understand that whatever people have seen in these order books and whatever people are talking about in these order books is because it's being advertised to them. So I said it in trading analysis, pretty much what I expect to see here. This first thing I mentioned, bottoms take time to form, doesn't V-reverse first time. So this is still absolutely valid. We're starting to bounce. People think, oh, is this it? Right? Are we back? This is exactly the bounce. Look at that. Like, this is from back in, I think, September or whatever. Sharp move down, starts to rally. Sharp move down, starts to rally. People start to think, are we back? Goes for one more push. That would be like if it goes down and fills the 60k bids. Just what I mentioned. You have some over here, same kind of thing, only a more aggressive move down. And if this is the bottom, like where we are here, if this is the bottom, what do you see? Move up, move up, move up into a higher low later on. So I expect one of those. There's going to be some kind of retest. Maybe we flush to new lows into those bids. Maybe we go below them. Regardless if this is the bottom or not, you've basically two passed, like I said. If this is the bottom, you're looking at higher low. If this is not the bottom, you're looking at new lows and a bottoms from there. That's pretty much my best view for right now. And huge demand below 60k, typical move to protect the market. People go crazy online saying that it means turbo moon, because everyone's like, let's go, we're back, the big walls here. How it plays out, initially we rally, then push down to 60k, get the bids filled. Bitcoin should be setting up for a nice rally. It's rallying as you see. Two ways to get there: be a strong rally from now without 60k getting hit, that's what we got, or a rally to 61 or 62 and then back down. So the strong rally without 60 getting hit is kind of what we're in the middle of. We're at the 61.2. This is the first area you could watch for it to potentially reject. If it rallies further, keep in mind that second path. If the market trades below 60 and doesn't see a good reaction before 59, it'd be weakness. Right? So if we go into those bids and it seems like they're filling, that's not a good sign. Not unless the market came back above 60. We'll bet the bottom is in here with one more push to 59 or 60, assuming the selling was due to war fears, which is backed up by TradFi moves, the VIX, which I mentioned. So today you want to watch the VIX, the volatility. You want to watch the stock market reaction, and you want to watch crypto's reaction in the New York session later on. That is it. GM. Guess I'll look at a couple alts. I saw that Apu was looking pretty good there. Pepe, not so much. The reason why Apu is stronger than Pepe is just because it's like, we know about Apu, but it's still only like 100 mil market cap coin, or 150. Like, it's not like it's, you know, a major across all centralized exchanges and is really one of the hot top ones. So Whiff had a nice reaction, and many of these will have taken those flushes to have nice bounces. And so ETH, much weaker than BTC. Sol, a bit weaker, similar-ish. Sol's a little bit stronger, slightly, I think. Yeah, down in support. So nothing major to read into that. Mostly to watch Bitcoin, the VIX, S&P, and what happens today with any further escalations, or at least the opinions of them. GM.